I just need to... Okay, there we go. Okay. So, yeah, the macro landscape hasn't changed since last week, really, at all. However, we do have a very busy week ahead of us. So what we've got is we're going to cover the upcoming news, and then we'll go into the watch list. So we've got quite a lot of central bank data coming out ahead of, or coming into the week. So we've got quite a busy day for the UK on Tuesday. Wednesday, we have a President Lagarde speech for the ECB. On Wednesday morning, we have quite a lot of news coming out for the UK. Then we have the Bank of Canada interest rate decision, as well as the monetary policy statement, which is a forward guidance, and the press conference, which again is forward guidance. Then right after, well, not right after, but the same day or later on that day, we have the Fed interest rate decision with the monetary policy statement and the FOMC economic projections. Then we have the press conference half an hour later, which this will be a busy day. Then later on in the week, on Friday, we have the Bank of Japan interest rate decision and monetary policy, and again, the press conference. So we've got Bank of Canada, we've got the Fed, and we've got the Bank of Japan. So it's not going to be a quiet week. Regardless of central banks, we have other day-to-day red folder news as well that we do need to pay attention to. So just be on guard. I'm not saying that we need to make any rash decisions, but again, just be very, very aware that it's a volatile week ahead. So going into the markets, again, the macro landscape hasn't changed. It remains very, very consistent with what we spoke about last week. The theme is sell Canadian dollar, sell the US dollar, buy the Australian dollar, and that's pretty much it. So you can see on the watch list here, we've got the Canadian dollar Swiss. Again, we've been speaking about all of this, so it's probably not too new. So I'm not going to go over the economics for each position or each idea, because again, we've spoken about it extensively. So we're going to just talk about the technicals really for this week. So with the Canadian dollar against the Swiss, we are looking for a very, very simple retest of this 50% level here on the fib. Now, this seems like a really, really attractive zone. Obviously, the 50% level, which is right here, does line up pretty much perfectly with the support that we've seen formed here on the H4. So it would give us a break, the retest, which will be a 50% retest, a 50% retracement, and then we could potentially look for this market to come lower. So it seems, from a fundamental view and a technical view, very, very straightforwards. So just to give you a view on the central banks. Now, again, we're not going to go over all of the fundamentals today, but obviously the central banks are key going into this week. So the Fed is currently dovish. The ECB is, we'll see in a second, the ECB hold rates steady at 2%. Obviously, we did have the ECB hold rates, was it last week? I think it was last week. For some reason, it's not loading. Let me just give the page a refresh. Oh, it loaded as soon as I refreshed, my bad. So the ECB is neutral to hawkish, so we'll go straight to the Bank of England. It seems like maybe my internet's slow today, or maybe the website's struggling, I'm not too sure. We'll come back to the central banks then later on. So AUD CAD, again, the RBA is very hawkish, and the Bank of Canada is expected to cut rates a couple of times this year. I will be sending all of this information through Discord, as always. So in the analyst updates, I'll send a couple of charts and the fundamentals behind them. So the Aussie CAD has been very, very difficult for me to try and navigate, not from a place of it's I can't explain that properly. Not from a place of it's difficult to trade, really. It's more just how the hell can we get in? Because the idea is that strong. The trend is too aggressive for us to take a trade. So on the H4, as you guys should know, I use the fibs for pullbacks and the moving averages, but there's been no pullback on higher timeframes, which has made it very, very tricky for me to try and send anything or take anything. So it puts me in a position where we can't really do anything until we do see a pullback. Now, I could look for something on a lower time frame, like the 15-minute, 30-minute. But the problem I've got with doing that is I do think that these higher time frames are due for a pullback at this point. So I'm not really willing to take an aggressive position. So I'm happy to actually just wait for probably Tuesday, Wednesday, once we get a bit of news in the markets, once the markets have had the opportunity to have some liquidity, some volatility come in, and then we could potentially enter in on a pullback. But yeah, on a technical view, I've got absolutely nothing for the Australian dollar CAD. Fundamentally, it's incredibly strong, and I really, really like it. It's a similar situation here for the pound Canadian. Now, I'm not a huge lover of the pound, or the UK for that matter. However, I do think that the current situation is any currency against the Canadian dollar is pretty much just a brainless buy. Obviously within reason. I'm not talking about crazy exotic currencies, but major currencies against Canadian dollar. It's a very, very straightforward long position. The euro dollar. Now, euro dollar is tricky because it's still in this range. Now, we've discussed the euro dollar for the past, I'd say 4 weeks, maybe even longer. And the general idea is, yes, we could see upside up into about 1.2, which is right here. But the issue is we've had such a strong rally on euro dollar over the past 3-4 months. Historically, there is very little, and again, this is speaking from like a historical and statistical standpoint, there isn't really much steam left. JP Morgan put out a report, again, 2 or 3 weeks ago now, saying that when euro dollar has a rally of rallies for a 3-month period, the price action beyond that point is very, very limited. It's normally, we could expect maybe a 0.8% increase up to, I think it was 2.3%, but we're not, or it's very, very unlikely that we're going to have some crazy rally up into 1.2. Now it's more going to be something like what we've seen in this period here, where it's going to be essentially just a horrible, choppy, range-bound, slow move up into 1.2, rather than it being, a very clean, easy to trade move. So I am not trading euro dollar, and it's completely out of my interest right now. I'm keeping an eye on it because I like to keep an eye on euro dollar, but yeah, there is no trade on there for me right now. The dollar Swiss, again, very, very simple position. The Swiss isn't necessarily doing well on a fundamental view. However, it is a stable currency, and it is a massive safe haven currency, so it will remain stable. Now, the technicals, again, aren't super, super simple. I was looking, and this was last week, I think we were looking at sort of something like this, where we had the break of the downtrend channel, and I was looking for just a very simple sort of retest and continuation lower, which we haven't had, but it does appear we could be seeing a lower high here compared to the other one. So if we can sort of continue this trend here, it might be a case of just selling the next lower high that we get. But again, the technicals aren't great on dollar Swiss, but the idea is very, very basic, and it could come into fruition at some point. There was, I'm thinking of the wrong asset. So yeah, dollar Swiss, I think we could be sellers, but again, it's just a matter of trying to get in. Might present a bit of a problem. Swiss yen, actually, I'm not really looking at anything on Swiss yen just yet. And dollar yen. So the yen is facing some problems. There's some concerns whether the Bank of Japan has room to hike rates. I'm in the mind they will, but it's just a matter of when. They're not, well, I can't say they won't, but I would be very, very surprised if the Bank of Japan hikes rates in the next meeting this week. So I would be very cautious about going long on the yen right now. Again, the idea of being long yen for the long term, I do like it. But right now, I don't think it's the right time. So if we could get the Bank of Japan rate decision and the Fed rate decision out of the way, and we can see the dollar yen come back into these highs at some point, that would give me a really, really nice trade into either of these targets. So we do have MUFG's target down here at 143.5, and we've got Goldman Sachs and Nomura Research down here at 142. Either of those levels seem completely possible and very, very good. But again, it's sort of similar to the euro dollar trade, really, where it's just sideways. We're not seeing any decisive trend, which again makes it very, very difficult for me to find any trade, because I rely on the trend and I rely on pullbacks within trends to enter. There is no trend here for me to do anything with. So yeah, we'll keep an eye on it, but right now there is nothing there. Euro Aussie, this one seems again very, very simple. Actually, this is probably one of my most favorite setups. So again, while we do have a relatively hawkish euro, I think we are still seeing problems within the eurozone that are not necessarily overly supportive. Whereas we do have, again, very strong economics for the Australia, and we do have a hawkish RBA. So I'm just looking for a pullback back within the 0.5 or the 50% retracement. That would also meet the 200 moving average for a clean pullback, and then I would be looking to take a short position. If we don't get that and this sort of aggressive trend continues, so if we do end up continuing lower from here, I will go down time frames onto maybe the 15-minute, 30-minute, 1 hour, and I'll look for a shorter term trade, looking to just capitalize on momentum. Beyond there, it kind of just goes into Aussie yen, Aussie dollar, and it's the same theory. It's just capitalizing on the strong Aussie, weak yen, and weak dollar. Now it's the same issue. The trend has been very aggressive, allowing no room in. So I do need to see a pullback on pretty much all of the pairs we're looking at today. Same thing here. I was looking actually at the Aussie dollar on Friday. I was on stream looking at taking this trade, but I already sent out a trade on Friday, and it was coming into towards market close, coming into the weekend. So I thought, you know what, it's probably best to just wait a little bit. So maybe Monday, Tuesday, we could look at getting in on the Aussie US dollar. But the trend, very, very good. We've already taken a trade, so you might remember this from last week. We took, I think it was 2.2% on the Aussie dollar long. So I'm basically looking to take exactly the same trade. So if you do want to see the reasons for this trade, obviously you can go back into the James terminal, which is where I send my signals, and you can have a look at the full economic thesis that I sent. So he's looking to basically just get the same trade on a pullback. Now, gold and silver, I would love to be buyers. I've been saying the same thing for basically the past 6 months, really. I want to be a buyer in both, but I just need to see some sort of pullback on the H4, really, which we've just not had. So that's pretty much as far as it goes. With the Fed easing, silver's obviously got industrial demand as well. We do still have economic uncertainty around the globe, and we've still got quite a lot of political tensions as well. I mean, look at Nepal, look at England even. There's some other places, I think it was Australia, that's had protests and riots and things. There's lots of tension, and it's not necessarily affecting the markets, but there is a lot of... what's the right word? A caution, maybe. But yeah, just a lot of uncertainty around the world, to be honest with you. And I think gold is still a really, really good buy on dips. We've obviously got the dollar just dropping in value as well, and we know that gold is a really, really good hedge for dollar weakness. So it doesn't really go any more complex than that. So nat gas, I've been talking about nat gas for the past 3 or 4 weeks, I think, at this point. It's still not ready. So I'm not a nat gas trader. However, we do have a trader with us on the team that does trade nat gas, and he's looking to be a buyer towards the end of the year into 2026. So we will tell you when we're entering this position. But right now, we don't think it's the right time just yet. There is not really any supportive factors for nat gas on the sort of the supply side. So that's that. In terms of open positions, we do have the... Oops, let me go down timeframes here. We do have the New Zealand US dollar. This is the one I sent on Friday. It's actually currently just in a minor amount of profit, nothing too interesting or nothing too profitable. But we did see a slight pullback, leading us into some drawdown, bounced off the 50 moving average, and we are now seeing a little bit of buyers stepping back in. I'm still very, very happy with all of the trades that we've got. They're all very, very strong. So this one is the Nikkei, or the JPN225, the Japanese stock index. We did take an entry all the way down here. We had pretty much, this is probably actually going to be the best trade I've taken this year. I don't want to jinx it, but so far that's how it's looking. We've had absolutely no drawdowns. If you go like 5-minute time frame, for example, there was nothing here. There was maybe obviously some drawdown due to spreads, but overall it was a pretty profitable trade from as soon as we entered. So we did have a take profit set at 44,700 right here. I removed the take profit and I sent it out in the signal thread. So if you did take profits, congratulations, that was about just under 3% gain. However, I have removed my take profits and I've actually scaled in at the original take profit, so around 44,700. Now, I don't have a hard take profit. I've got take profits set at 50,000. It's more just, again, a visual guide. I like to have take profits set even if I don't stick to them. We do have very, very supportive factors for the Nikkei. So we've got Japanese stimulus, weak yen, we've got rising investment within Japan, and we of course have the Bank of Japan sort of caution around them hiking rates in not the next meeting, but the meeting after the one this week. So the landscape for the Nikkei to continue higher looks very, very good. But yeah, it's just a case of how do we manage this trade into the Bank of Japan decision. Now, what I've got, or the rule set that I've got for this trade, or the plan, is very, very simple right here. So if we can hold... if we can get to 45,000 on the Nikkei by the time we get the Bank of Japan rate decision, which is Friday morning for me, I think it's 4 a.m, so it'd have to be on Thursday, I'd be happy to trail stops. So I'd need to see something like this, and then I'll be trailing stops up into these lows. If we don't do this and we end up hanging around here, I'll very likely close the scale in and take partials on the initial position and let the rest just run into the rate decision. I don't think we would see anything too crazy. I think it's pretty much expected that we're going to have a rate hold, but it's just in case something crazy happens. But again, we'll get to that closer to the time. It's still a bit premature to be planning that far ahead, in my view. Excuse me. Next up, we have the CAD yen. Now, this one is very, very textbook. It's I don't want to call it beautiful. That's a little bit cringe, but it is a really, really clean trade. So we had a pullback into the 50 and 200 moving average on the cross here, indicating we've got a trend change. This was also a rejection of the fib level. It's basically what we teach you on what this is a strategy. So pretty much right after entering, we had a very, very strong H4 candle to the downside. I would expect this to just continue to run to the downside. I don't think there's any complexities. There's nothing I'm concerned about with this trade. It's just a case of letting it run into the lows here at 105. So again, very, very basic, very straight to the point. The next one is New Zealand CAD. Now, I didn't send this out because I took this quite late into Friday and I didn't want to put your portfolios at risk over the weekend. So I will be sending this tomorrow if there is, if I do see some positive developments, and I do think it's still a valid trade on a technical front. Fundamentally, it's completely fine. I'm very, very happy with it. But again, it's just because I had to scale down timeframes to get in, because the higher timeframe just isn't giving me anything here on the H4. Overall, it's very, very simple. Again, just using the fib, looking for a pullback, saw a rejection, expecting it to run higher into the previous high at the 0.832 level. But yeah, that pretty much covers it. It's a very, very straightforward week in terms of the watch list. Obviously, news might be a little bit of a complicated one. So just be very, very cautious if you are placing new positions. The Edge Finder, these are the current readings. If you do have any questions for this week, let me know. If not, we could probably call it there. I know it's been quite quick, but again, nothing's really changed since last week. It should be very, very simple. It's now just a case of really protecting the positions we've got rather than placing new ones, in my view. Again, just because of the busy news week, I don't want to have too much exposure on the line. We took a DAX position last week. We took two other FX positions. Oh no, sorry, three, as well as the Nikkei trade. So we had a very busy week last week. Ended up in profit. We've currently got quite nice profit floating as well. So I don't want to start taking unnecessary risks into a busy week. Anyway, I feel like I've repeated myself a couple of times there, so I do apologise. I'm just checking my notes to make sure I've not missed anything or forgotten anything. Just bear with me for a second. Okay, I'm just going to quickly run through the notes I've got, just so if there's anything that I haven't covered that you need. The US dollar has a bearish outlook, basically until 2026 at least. The euro is bullish, but only slightly. It's kind of neutral bullish in my view. The yen is neutral to bullish in 2026. Nothing overly interesting with the yen. The pound is bearish. The Canadian dollar is bearish. The Swiss is pretty neutral to bearish. Australian dollar is bullish. New Zealand dollar is bullish. Gold is very bullish. Silver is bullish. Oil is neutral to neutral to bearish. The US indices market, so the S&P, Nasdaq, Dow Jones are bullish, and the Russell, and the Nikkei obviously is bullish. So I do actually think the US markets, so again, Nasdaq, S&P, Russell, Dow Jones, they could be really, really great positions into 2026 because we are getting those Fed rate cuts, and there is a lot of speculation around those rate cuts and how long are they going to last. But either way, it's still a positive thing for these markets. So there are some setups we could be looking at. Nothing that's really piqued my interest too much, but the Dow could be a pretty nice pick. But again, with the rate decision coming and the US data we've got coming next week, it's a little bit of a risky one, but it could be one that might be worth taking at lower risk, maybe 0.5%, something like this. So a very simple sort of break and retest, or if we see a full correction of this candle from, when was this, Friday or Thursday? From Thursday, we could look for something more like this. So I'll leave you with that. Again, not an overly complicated week. You guys, I don't see any questions in the chat, so I'm going to leave you with that. If you do have questions, or if there's anything you want me to expand on later, if anything comes to mind, just let me know in the chat, and I will get back to you. Guys, have a great weekend. I'll speak to you all very soon. Thank you for joining, and enjoy the rest of your weekends, whatever's left of it. See you later.